Candlesticks are very important when it comes to trading, and this video will be your guide to the different types of candles that are out there. So the first candle is called a Doji, and this is going to be one of the most common candles that you see out there. And if you look at my chart here, basically what it is these two candles right here, or this little guy right here. Basically what's happening during that day, your price is moving up a little bit, your price is moving down a little bit, and you're kind of finishing in the middle. You're frequently going to see candles that just kind of look like a cross, or maybe they have a little bit more on them where they look like that. But really what that means is you had a starting price right there, and you moved up throughout the day, and you moved down throughout the day. But in the end, there was just really no consensus on the stock. Consensus meaning that you didn't have agreement between the buyers, which was going to push the stock up, which would cause a large, thick candle going up, or consensus of going down, a large, thick candle to the bottom. So this is called a doji. You're often going to hear me say the word doji. And when I come across the dojis, I just say, just ignore them. Just move on to the next day. Don't get too excited. There's nothing to do as far as a buy or a sell. The second one, and since we're on the topic of something going up in the day or down in the day, you look for things that have big wicks on them. A candle like this one right here. So what does this mean? Well, you open the day down here at not the base of the candle, but towards the bottom. You had price action, which moved all the way up. So in this instance, this is Google. Your price moved from about $148.66 to $152.07 throughout the day. And then it pulled all the way back down. And this thing actually went to a low of about $146.96. But as you can see here, the wick is what we're looking at as the most important part. Typically, when you see big wicks like that, one of two things is going to happen. And I know this can really happen in any environment, but one of two things is going to happen. Either the next day you're going to get something very similar and it's going to cause a tweezer pattern, or it's just going to kind of continue to go sideways for a couple of days until the stock almost gets its legs under it. What I like to think of big wick candles as is when you're on a boat and you get a little bit seasick. People get really excited as they're getting on their cruise ship and they're going out to sea and they get this high. It's almost as if that's when your stock price runs up, and then you are on the boat for about an hour and you're saying, oh, I don't feel so good. And you come all the way back down to low and you have to go lay in bed. That's kind of what I see big wicks as. And the next day, you just kind of take it easy. That's the best analogy that I can think of to tell you when you see big wicks. Don't get too excited, just chill out and see what's going to happen the following day. The next candle is a hammer. And why do we call this a hammer? Well, there's a perfect hammer right here on Google. It's right here. And we call it a hammer because it really looks like a hammer. You have your long wick, and then you have your price at the top, and it just kind of stopped there. So what happened during this day? Well, this day on Google's chart, you kind of started the day right here. You moved all the way down, and then you moved all the way back up, and you kind of finished the day in the same spot, leaving that long wick, which made it look like it was going to maybe go short, but it didn't happen. And what does a hammer formation mean? It typically means a change in direction, and that's exactly what you saw here. So you saw here 1, 2, 3, 4 days of kind of nothing really going on. All of a sudden, you got this hammer formation, and then your stock price began to rise on you. So I know a lot of you are thinking right now, how am I supposed to see this on a chart? I mean, I've been doing this for 20 years, 21 years, whatever it is. Yes, it's easy for me to see. For you, it's repetition. What I would encourage you to do, and what I did when I started, and still to what I do to an extent, I pull up the S&P 500. I have all 500 stocks, and this is exactly what my mentor told me to do. I had all 500 stocks, and I would literally start at the first one, A, ticker symbol A. And I would say, okay, I'd zoom this out, and I would look and say, all right, where are some hammer formations on here? Well, I see some hammers in here. They change direction, but not really. This was a hammer formation. You can see the change in direction. Let's just continue on. Here was a hammer formation, chilled out, change in direction. So I would just go through charts. Next one, I would just go to AA. I think it's Alcoa Aluminum. Yep, Alcoa Corporation. You go and you look for hammers and so on and so forth. I would go through 500 stocks every day looking for that one single pattern. And then the next day I would come back and look for another pattern. That's what you have to do. All of this is just about repetition. Guys, if I can do it, you can do it. The next candle is a inverse hammer. So it's basically the same thing that we just saw, but it's the exact opposite. And I'm probably going to be able to find an example here on Alcoa aluminum because it's the chart we're on. Let's see here. There's a hammer. You had to actually change in direction. Now, let's see, right here, inverse hammer. And you can see, guys, all I had to do was look at, this is from July through February. This is a very small window. You're going to see these things happen a lot. So this is why it's very important for you to digest the resources in this video and memorize these types of candles. So this is an inverse hammer. Now, if a hammer formation meant that you were going to get a change in direction to this side, an inverse hammer is going to mean you're going to change in direction to this side. And that's exactly what you got here. Now, I would also like to say, it's not a guarantee that it happens every single time. Remember what this is. We are trading based off of probabilities. That's what this is. You need to understand that you want to put yourself in the highest probability situation for an event to occur. And when you see a hammer, when you see an inverse hammer, just know that it's not an automatic that you're going to get a reversal the next day, something as dramatic as this. But there's a high probability that it happens. That's a very important thing to remember. I don't want people going in and saying, instantly, I see an inverse hammer. Mostafa said to do this, this is what I'm going to do. No, there's a lot of other context clues that go along with it. But these are just some little things. And as you kind of piece all of these things that I'm talking to in videos together, you're going to become a good trader if you follow those rules. So before I move to the next candle, I want to move back to going through 500 stocks per day. It can be a very daunting task, and it can be very daunting to do alone. Join my Patreon. It's $25 a month. You get access to not only me, but all of the other traders that are in the same boat as you. Some people are brand new and they might be starting out at the same level as you. Guys, we were all there. I promise you. You will get through the tough part. It won't sound like a foreign language forever. So join the community. I go live 2 times a week. You get to see my live trades. We trade together. It is absolutely fantastic. And you can ask me any questions you have in the chat. $25 a month. There's only 100 spots limited. Join now. Now let's go to the next candle. This is the engulfing candlestick. So engulfing candlesticks, I like to say, you're probably not gonna hear me say engulfing candlestick that much. I'm gonna say your buy signal. So let's take out stochastic for right now. That's not what this video is focused on. It's focused on looking at engulfing candlesticks. Now, why do we buy engulfing candlesticks? Why do we buy something that looks like this, that's all filled in yellow or green if you're going up, and not something that looks like this? This is very weak. This engulfing candle means that all of the direction is going one way, whether it's up or down, if you want to go long, it's buying. It's a big green candle in this instance right here, in this instance right here, in this instance right here. And you see what happens after those days. You get an engulfing candlestick, and the subsequent days it goes up. You get an engulfing candlestick here, the following day goes up, even though that reverse hammered on us. You get a big engulfing candle here, a big engulfing candle here, and you had one throughout the day here. So what does that mean? It's buyers coming in. You can associate it to the volume. So when you come over here and look at the volume, you'll say, well, those days that you had these big engulfing candlesticks, look how much volume you had coming into that thing. Even here, you had really good volume pushing you to the top side, really good volume here. That's what you're looking for. And on the downside, when you're getting engulfing candlesticks, you want to see selling volume. You want to see good selling volume coming in. This is your buy or your sell short signal. And this is the most important candle that you are going to see when it comes to charting. I do not want to see any of my students not buying engulfing candlesticks. I don't want to see somebody buying what looks like an inverted hammer or something that looks like a doji or something like this. This is a very weak candle right here. Yes, you got the following day to go up, but this candle right here, very weak. You had the stock price moved really high, the stock price moved really low. Yes, it had a big body in the middle of it, but look how long those wicks are on each side. I would rather you wait till the next day and buy there, or buy the third day, or buy here, whatever it is. Remember, you're giving yourself the highest probability to make money. Sometimes you're just gonna have to let the stock price go, and that's why people do not make money in this. They just jump in because they see the price moving. They don't follow the pattern. If you follow the patterns and the rules over and over and over, you will do better in the long run than if you wishy-washy, throw stuff at the wall and hope that it sticks. So you've seen the candles and how important they are. Chart patterns are also extremely important. Go watch this next video on chart patterns and it'll benefit you greatly in your journey to becoming a successful trader.